put the spotlight on the world of commodities. We have Kunal Shah, who's the head of commodities research, and Nirmal Bang joining us this morning. Very good morning to you, Kunal. Thank you so much for being part of the show. Wanted to understand about steel prices. They were under pressure led by buyer resistance. If you could help us understand what exactly is hurting the demand there when you talk about the steel sector as a whole?
I think if you talk from the global point of view and mainly from the Chinese point of view, initially because of the trade war between US and China, and we've seen the escalation in the tariffs, that has led to a slowdown in the demand because what structurally it does, it puts a lot of pressure in already bleeding the real estate sector. But now with the moderation in the trade war between US China, China cutting interest rate, and expectation building up for the new stimulus is one of the reasons why prices have stabilized. And going forward in next 3 to 6 months period, we expect steel sector to do stabilize from here, and gradual recovery is expected because globally we are at the cusp of start of the interest rate cut cycle. So we have seen Europe, US also may join the race. Most of the Western central banks are likely to cut their interest rate. Most of the emerging market central banks also are going to witness, like India, we are going to see more interest rate cuts. So globally stabilization, in India, strong demand, even though we have a monsoon, but a broader point of view, that the stronger demand is expected in next 6 months, 2 quarters. So steel prices are likely to do very well, and we remain quite optimistic about the outlook of overall steel industry.
Looking good for the steel industry going ahead. Kunal, hi, this is Snehi also joining in the conversation. We're hearing some macroeconomic moves coming in from China as well, wherein they've slashed their loan prime rates. Help us understand how real estate demand is expected to shape up in China. Can we expect some recovery on that front soon? And if so, will that support steel and iron ore prices going ahead?
Yeah, so like I said, the cut in the interest rate, cut in this 10%. So these all indicates towards stabilization. We are seeing stabilization in the real estate sector. So what last year the trend was, the real estate sector in China was slumping. This is the year where the prices have stabilized. We are not seeing, and in fact, in some of the key cities, we have seen rebound in sales also. So steel, the outlook of steel mainly determines on what is happening globally. I'm talking about the global outlook. It depends on what's happening in China. On the production side, we are seeing because of the lower prices, the production cuts have also taken place in China. So that has also helped, to ease the glut in the market. Now, considering the stabilization period, we expect the demand of iron ore also to remain pretty strong, and especially ex-China, India, Philippines, Indonesia. In Asia, the steel demand is going to do very well going forward. And it's mainly the strong growth, 8% growth is expected in Indian market. So I think and you also have to remember, we are at the cusp of a rate cut cycle in US. So the dollar index is also going to decline. So it all combines to a broader bullish scenario for steel industry and commodity complex.
Can I not ask you about gold then, actually, Kunal, given the fact that it is down sharply from its all-time high levels, 8% down actually. In fact, and this happened in the span of about a month or so. Do you think that gold now still is a safe haven that one can look at buying at this point in time, or do you think that that's sort of an event where you'd consider gold as a safe haven? That sort of a scenario is behind us.
See, gold will continue to remain safe haven. There is no doubt about it. But the fact is that it is already run way ahead of its fundamentals. Most of the positive news because of which gold prices should have been moving up is already discounted in the prices. And I believe that in near term, gold prices are not likely to surge. The parabolic move, what we saw from 91,000 to 99,000 was just a one-off event. I'm not expecting in a shorter term gold to again move up. Right now, it is likely to consolidate and gradually drift lower towards 89,000, 88,000, those kind of levels on Indian bourses. And in international, we are going to see gold may decline to levels of $3,100, $3,000. So in a near term, the outlook remains weak. mainly led by what we are seeing is a weaker demand from India, China. Central banks at elevated rate are not buying gold. And third most important thing is most of the positive news are discounted in the price. So these three reasons makes me believe that gold prices are likely to drop further, and it will continue to hold its safe haven status, but not the right time to buy. Wait for more pain, and then you can initiate long position.
Right. So, what about crude oil prices then? There are a lot of moving parts when you talk about crude oil prices, right? Right from what is happening, the growth concerns, OPEC plus hike, US-Iran deal, a lot of news flow also impacting the sentiment when you talk about the crude oil prices. Do you think that the fact that we saw the dip for the crude oil prices is just momentarily, because how much more of a production can OPEC go and hike, isn't it? At some point in time, it will plateau or they will have to cut down, and that's when we'll see the sharp rise in crude oil prices.
So oil going below $60 is a red flag for OPEC, and even for a lot of oil producers.
It's like for me
So
also, no, when
they
I have
need
to give
at least
BNSN to Kanishka to do it.
US crude oil. What we are seeing is that every time WTI goes below $60, you see US strategic petroleum reserves have been filled by US. So that is one support. US themselves are buying oil below $60. They want to again fill their strategic reserve. Number one. Number two, if you look at the demand side, so if the trade war, global trade war, which Trump has started, if that scenario is moderating, then the demand should gradually improve rather than so. Earlier, we had a forecast that China, we will see a contraction of GDP by 1%. US GDP also will contract. But now, with the moderation, almost 14 to 15 countries are on the verge of signing up the trade deal with the US. We believe that the possibility of sharp correction from here is very less. We are expecting a gradual recovery in oil prices. The WTI may edge towards 65, Brent may edge towards 68, $69. And in a shorter term, we continue to remain optimistic about the outlook of crude oil.
Now, before we let you go, since you also cover agri commodities, help us understand if these unseasonal rains have impacted crops right now, because at least when we speak to other consumption players, be it ACs or be it cooling talc powders, everybody is complaining about summer portfolio getting affected on the back of unseasonal rains. Give us a sense of how this could impact crops, which crops stand to be the most impacted, and how it could have impact on prices going ahead.
Well, it's too premature to determine whether the crops will be impacted because of these unseasonal rains. In fact, we are at the start. We had an early monsoon this time, but it doesn't necessarily mean that we are going to have a bad crop. It depends upon subject to subject, and the data comes after 1.5 2 months of the sowing. So I think right now we should not focus. The fact is the monsoon is expected to be good this season. The expectation so far is 105% rainfall and a wider distribution. So this is very positive from the agriculture commodity point of view broadly, and it will enhance the productivity of a lot of this crop right now this season. So I'm pretty optimistic about the overall outlook of agriculture commodity. We are not going to see food inflation shooting up because of this erratic rainfall which we had recently. It's just the pre-arrival of monsoon. So I don't think so it is going to have any major impact.
So that's the take coming in on commodities, the overall commodity market. Thank you so much, Kunal, as always, for joining us in the show and giving us those insights when you talk about steel, iron ore, gold, or for the matter of fact, oil, and also what it means for the crops, given the fact the way how the monsoon is going to be panning out.